Robert Kiyosaki recently warned and predicted about the role of Bitcoin in the global economy. His insights have sparked discussions among investors and financial analysts. Kiyosaki has been vocal about his skepticism toward traditional fiat currencies from the beginning, particularly the US dollar. He has labeled the dollar a scam, criticizing the Federal Reserve and major banks for their roles in what he perceives as a corrupt financial system. He argues that these institutions have been reckless in their monetary policies, leading to the devaluation of the dollar. In his view, assets like gold, silver, and Bitcoin offer more reliable stores of value. Robert Kiyosaki, the best-selling author of Rich Dad Poor Dad, has never been shy about making bold financial predictions. Over the years, he has warned about stock market crashes, the collapse of the US dollar, and the potential rise of assets like gold, silver, and, most notably, Bitcoin. Recently, Kiyosaki has once again made headlines, sounding alarms about the global economy and urging investors to prepare. His message is clear: fiat currency is dying, and Bitcoin is the future. But how much of this warning is rooted in reality, and how much of it is just another dramatic forecast? In this video, we'll break down Kiyosaki's recent statements, examine the economic factors he is basing his claims on, and determine whether his perspective holds weight or if it's simply speculation. Robert Kiyosaki's warning: the death of the US dollar. One of Kiyosaki's most controversial statements is that the US dollar is a scam.
Just the dollar, the yen, the peso, the euro, the yuan.
Yeah.
Fake.
And that it is on its way to losing its value completely. He frequently criticizes the Federal Reserve for printing money at an unsustainable rate, causing inflation and devaluing the purchasing power of ordinary citizens. According to Kiyosaki, the government's reckless spending and debt accumulation will ultimately lead to the downfall of the dollar. He has repeatedly warned of hyperinflation, pointing to historical examples such as Zimbabwe and Venezuela, where fiat currencies became worthless due to excessive money printing. Kiyosaki's concerns are not entirely unfounded. The US national debt has surpassed $36.4 trillion, and inflation remains a pressing issue. While the Federal Reserve has taken measures to curb inflation through interest rate hikes, Kiyosaki believes these efforts are insufficient. In his view, the only way to protect wealth is by investing in tangible assets that cannot be printed or manipulated, such as gold, silver, and Bitcoin. Bitcoin, the ultimate hedge against inflation? Kiyosaki has been a vocal advocate of Bitcoin for years, calling it people's money and the best alternative to traditional banking systems. He believes Bitcoin is the solution to government-controlled monetary policies that erode the value of fiat currencies. According to him, Bitcoin offers a decentralized and finite alternative to the dollar, which is why he predicts its value will skyrocket in the coming years. Recently, Kiyosaki made an even bolder claim, forecasting that Bitcoin will reach $350,000 by 2025. This price prediction is far higher than most analysts' estimates, but it aligns with his belief that the financial system is on the verge of collapse, forcing people to seek refuge in Bitcoin. While Bitcoin has had an impressive growth trajectory since its inception, it remains a highly volatile asset. The cryptocurrency market has experienced multiple boom and bust cycles, and regulatory uncertainty still poses a risk. However, Kiyosaki argues that the long-term trend is what matters. He believes that as trust in fiat currency continues to decline, Bitcoin adoption will rise, driving prices higher. Economic collapse. Is Kiyosaki's prediction realistic? Kiyosaki's latest warning includes predictions of an impending market crash worse than the 2008 financial crisis. He has stated that the world is headed for a greater depression, citing factors such as soaring debt levels, geopolitical instability, and the declining purchasing power of the middle class. Some experts share concerns about economic instability, but disagree with Kiyosaki's extreme predictions. While recessions are a normal part of economic cycles, the idea of an imminent financial apocalypse remains speculative. The stock market has shown resilience, and although inflation has been a major issue, government interventions and interest rate adjustments have played a role in stabilizing the economy. People argue that Kiyosaki often uses fear-based tactics to promote investment in alternative assets. While it's true that gold, silver, and Bitcoin have historically been used as hedges against inflation and economic uncertainty, Kiyosaki's extreme warnings sometimes overlook the broader financial landscape. The economy is complex, and while risks exist, an outright collapse is not guaranteed. Should you follow Kiyosaki's advice? Given Kiyosaki's strong stance on Bitcoin and his repeated warnings about economic collapse, should investors take his advice seriously? The answer depends on several factors. If you are looking to diversify your portfolio and protect yourself from inflation, adding assets like Bitcoin and gold can be a reasonable strategy. However, it's important to remember that no investment is without risk. Bitcoin remains highly speculative, and its price is influenced by factors such as government regulations, technological developments, and overall market sentiment. Financial experts recommend a balanced approach. Instead of going all in on one asset class, diversification is key. Stocks, bonds, real estate, and cryptocurrencies all have their place in a well-rounded portfolio. Additionally, conducting thorough research and consulting with financial advisors before making major investment decisions is always advisable. While Kiyosaki has been right about certain economic trends, he has also made predictions that did not come true. For instance, he has been warning about a total market collapse for over a decade, yet the stock market has continued to reach new highs. His past predictions of hyperinflation have also not played out to the extreme levels he forecasted. That being said, some of his advice has been valuable. His emphasis on financial education, passive income, and investing in tangible assets has helped many people build wealth. However, his predictions should always be taken with a critical mindset rather than accepted as absolute truth. Kiyosaki accurately predicted the 2008 financial crisis. His subsequent forecasts have been less precise. He has consistently anticipated market collapses and hyperinflation, yet these events have not materialized as projected. This pattern suggests that while his warnings are rooted in genuine concerns, they may not always align with actual market developments. Investors should approach such predictions with a critical mindset, balancing them with empirical data and diverse expert opinions. Kiyosaki's emphasis on financial literacy is commendable. Understanding financial principles empowers individuals to make informed decisions, recognize opportunities, and avoid common pitfalls. However, financial education should encompass a wide range of topics, including risk management, market analysis, and behavioral finance, rather than focusing solely on specific asset classes.